Happy August. It's Monday. That means it's Setup Monday here at Brave New Coin. Let's take a look at some charts. What's been happening over the past week or two with Ethereum's 2-week run. Bitcoin's 42% off the bottom. Is it too much? Too soon? Everyone's asking. We'll start with some fundamental non-price related stuff. Hash rate on BTC has slowly begun to recover, with some recovery in difficulty. The bottom line across the board really is we've stopped melting on every metric imaginable for all coins essentially. Ethereum's hash rate or difficulty continuing to recover as well. It'll be interesting to see what effect EIP 1559 will have on hash rate and difficulty, if that will plateau hash rate because of block reward reduction, or if it will increase hash rate due to deflationary pressures over time, therefore increasing price and increasing mining profitability. We'll see what happens. I have no idea. I have no idea if EIP 1559 is even going to be that impactful if fees remain low. Best case scenario is fees slowly creep up, EIP 1559, deflationary effects slowly kick in, price slowly moves up over time, and we can kick off a new bull run as those cumulative effects continue to suck out supply in the market. We'll see if it happens. But at a bare minimum, hash rate increasing, transaction counts on ETH in the green here, Bitcoin in the red, have begun to turn up. Transaction counts relative to ETH on Bitcoin have never been, I shouldn't say never, but for the most part haven't been exceeding ETH for quite some time. Active addresses, however, Bitcoin reigns supreme, and again those dropped off significantly and have since rebounded, kind of back near all-time highs for both ETH and BTC. Obviously with NFT mania going on the ETH side of things, that's going to improve metrics like active addresses, transactions. It's going to improve mining profitability because of fees, which is going to improve hash rate. All this stuff sort of feeds into itself, so long as there's activity of some kind. So although we're seeing on-chain activity, we aren't seeing volume on exchanges pick up, at least centralized exchanges, despite the kind of outsized move in price over the past 9 to 12 days. For BTC, it's moved from the bottom of the range to the top of the range in one fell swoop. It's retraced 62 days of sideways down chop in 9 or 10 days. It's kind of uncomfortably up here in a very awkward spot. You know, at this point, the risk reward for a move to 47 doesn't look as good as it did at 35. And the problem with that is, the reason behind that is your stop loss at this point is basically 35. At the Kijun here, what I was saying on Twitter the other day is you want the Kijun to be with price, because otherwise you risk mean reversion like this. You know, just as we expected, a mean reversion attempt to 47 eventually. At this point, you're kind of, at least I'm expecting a mean reversion attempt to around 35 eventually, which is why I'm not adding more to the Enzyme stuff right now, because I think it is too much too soon. I'd much rather see this chop around a little bit, go down, whatever it is. I'll buy the dip if it does, but I think this needs some relaxation, needs some time in the near term. And this could chop around for 1 or 2 months before 47. I don't know. When it's in the cloud, it's a no trade zone. But if we do breach one edge of the cloud, the expectation is we touch the other edge. So although I expect an edge-to-edge move eventually, the risk reward just isn't there, even with the bullish TK cross. So a lot of nuances here. It's not like I'm hedging my calls or anything. It's just uncomfortably up here, right? Like, I'd rather see this push its way, shove its way through the cloud at 35, 36, 37, and then initiate that move to 47, than just all of a sudden sort of jump the gun. It's like, okay, well, here we are. Now what do we do? People who were out are probably going to buy the dip pretty rapidly because they saw the past 10 days and they're like, I got to get back in, right? You know, those are the people who are probably FOMOing the dip harder than most at this point. If we do go lower, which I think we eventually will, you can watch us on the 12-hour as well. Again, you're seeing 35, 36 as support. The beginnings of head and shoulders on lower time frames. Again, virtually no volume, relatively no volume. This is stamp, so it's whatever, but we need some volume. I don't know what it's going to look like, but it should be some sort of ramping effect. I don't want to see higher prices on lower volume. That's definitely in the bear div camp. ETH has had pretty crazy run over the past 2 weeks with just green volume, right? Again, but it's pretty low. I don't know. Maybe I'm not bullish enough here, but we're at the cloud. Still a bearish TK cross on the daily. It's kind of moving too fast for the daily cloud to know what to tell it as far as signal wise. Because again, if you're playing this as an edge to edge, your risk reward just isn't there yet. I'd much rather see this droop down to 22.23 into mid-August and then initiate that move to 3K, which is still possible. I'm not saying it isn't possible, but it's just tough to buy anything that's up 14 days in a row with a straight face and say, yeah, I expect another 20%, or I expect this to just keep going infinitely, right? Eventually this thing's going to pull back. It's going to slow down. The cloud on the 12-hour likes 23. Kijun still all the way down here at the 22. So I think patience is wise here. Patience will pay off. You'll get a better entry, most likely. Even if this goes to 3K, like I'm not worried. I'd still much rather buy it lower because we're in the transition period of definitely bearish to neutral to bearish. Even with this move, which is as crazy as that sounds, on trend-wise, like we're still in this big range, still below the cloud. We did survive the 200-day moving average on BTC, or on ETH. We're above it again on BTC. Just a lot of wishy-washy, unsure, nonplussed, mediocre stuff, even with price moving up the amount it has. Obviously impressive for anything to move like this quickly, but just I'd be careful here. Patience. And on high time frames, this is the 2-year MA. This is the 2-year MA multiplier. There isn't really, at least for BTC, there isn't a lot of history of us sort of dipping below the midline and then returning back above the MA multiplier. Typically, we kind of ping pong. Again, this is like N of 1, right? So what do we know? But typically, we have either found support or resistance at the midline and then have sort of ping ponged all around. An inverse example of what we're seeing now is kind of what happened in June, July 2019, where we didn't quite make it to the midline, but we did dip back down into that buy zone. So maybe we don't exactly make it to the buy zone, but dip or increase to the 5x multiplier. I don't know. It's super awkward, not clean. ETH, similar example, maybe in 2017. But it's pretty clear where the buy zones are, where the sell zones are. That's clear as crystal. But the entries in the meantime are kind of just like, your better risk reward is sub 20 for BTC. Your better risk reward for ETH is sub 13, right? Obviously, that's a 50% drawdown from here. So the technicals are messy here. ETH is reaching for its W double bottom breakout between the 1618 and the measured move, somewhere between 27 and 3K, and arguably already hit that 1618 extension, and it probably slows down in this range, just as it did similarly earlier in the year on a similar W pattern. So this is one reason to start to think about rotating into other stuff, right? Whether it be cash or DeFi or whatever. Because ideally you're selling into strength. You don't want to be selling when everyone decides 14 days is too much up, right? You want to be there ahead of time with a plan saying, okay, I'm going to be selling slowly between 27 and 3K. If it goes up, it goes up. But I've had enough. Even if you're like me and you kind of were holding since 23, even I'm looking at this thinking, this is a lot, right? Kind of too much too soon in the near term. On ETH-BTC, it looks super strong. It had been threatening lower lows on this kind of descending triangle / pennant thing. But if you measure this, it looks like it's reaching for 089. I don't know the trajectory or how long that'll take. ETH-BTC has never done well in Q3 or Q4 historically. So that's important to keep in mind. EIP 1559 is going to be the only thing everybody's talking about in the near term because it's happening in a couple days, but I'd keep your eye on the prize and just remember that that is probably a longer term cumulative effect, very similar to a Bitcoin halving. These effects don't kick in immediately. There may be hype surrounding the event, but ultimately the supply demand effect doesn't kick in for many weeks. So I think it'll take some time. But technicals on this, if I knew nothing about ETH, technicals on this look great. Looks great for up. I like 089, 09, something like that. Moving on to DeFi stuff. DeFi is earlier in that W breakout at resistance here. I know this chart's a mess. Previously we had this range, then we broke the range, had a death cross, had a couple falling wedge type of patterns developing. Most recently we've had this W along with everything else at the bottom of the previous range with a pending golden cross probably into mid-August. So as a whole, if there's a DeFi chart that looks similar to this, I think it looks good to rotate into from the majors, from cash, whatever. Not investment advice, but I feel safe in the DeFi fund. We're 90-10 crypto cash right now. So that seems a great hold to me because I think this has upside here. I don't think this is going to continue making lower lows. It looks like we're done, at least in the near term, despite volume being increasingly diminutive over time here. Ideally, what we see on this breakup is a jump in volume and a price move back to this 10K, 11K range on the index. Now, individually, this stuff may move before one another. Comp probably looks the strongest for some sort of inverted head and shoulders situation to 650, 700. So I'd watch that very closely, pending golden cross here. And I'd watch stuff that looks like Balancer, where it has like this diagonal inverted head and shoulders that's starting to break up. And if you hate all of that pattern-wise, just watch the 50 and the 200, right? This is the gap that it's going to try to fill between 23 to 30, let's say. So percentage-wise, I'm comfortable with holding BAL and the Enzyme DeFi portfolio for this reason. Based on technicals, it looks good for up, along with many other coins in that portfolio. So lastly, I'll just mention the ETH-BTC fund and DeFi portfolio I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool where you can send ETH to USDC or just watch what I'm doing. You can see AUM, allocation, performance, all of the DeFi coins I'm in. You can see all the trades I make. You can see me moving in and out of Yearn, Compound, Aave. You can see me kind of waiting to buy the dip on the ETH-BTC side of things. I did not really feel comfortable over the past couple of days buying 38 to 40 for the exact reason I was talking about in the video. It just looks like we need a little bit more down before I want to start buying again. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.